Welcome to my channel again, everyone. Please show love by liking and subscribing to my YouTube channel. In today's video we are going to talk on what currency is good to trade in Forex trading and why you should choose a certain pair. In Forex trading, choosing the right currency pair is essential for optimizing profitability, managing risk, and aligning with your trading style. While technically any pair can be traded, certain currencies and pairs are considered more favorable due to their liquidity, volatility, and the availability of information. First we are going to talk on major currency pairs. Major pairs are the most traded currencies in the world and always include the US dollar, USD. For example, Euro to US dollar, Euro, US dollar, GBP, USD, British pound, US dollar, USD, JPY, US dollar to Swiss franc, US dollar, Swiss franc. Why trade major? 1. High liquidity and tight spreads. 2. Abundant market news and analysis. 3. Smooth price movements, less prone to erratic spikes. 4. Ideal for both beginners and advanced traders. Second, let's talk on minor currency pairs, also called cross-currency pairs. Minors are pairs that don't include the US dollar but consist of other major currencies such as Euro to pound sterling, Euro, British pound, EUR, JPY, Euro, Japanese yen, GBP, JPY, British pound, Japanese yen. Why trade minor? 1. Good volatility for swing or short-term traders. 2. Still relatively liquid. 3. Sensitive to political and economic instability. So how to choose a currency pair? Number 1. Trading style. Scalpers and day traders prefer liquid pairs with tight spreads like Euro to US dollar or US dollar to Japanese yen, while swing traders may prefer volatile pairs like pound sterling to Japanese yen for wider price swings. Then, position traders might focus on macroeconomic fundamentals and pick pairs influenced by interest rate trends. Number 2. Time and day. Trading sessions affect volatility. For example, Euro to US dollar is highly active during the London and New York sessions. Number 3. Economical and political stability. Currencies from stable economies like the US, EU, Japan are more predictable. Avoid currencies tied to unstable economies unless you specialize in high-risk trades. Number 4. Your knowledge base. Choose pairs tied to economies you understand or follow closely. This helps in interpreting news and anticipating moves. Now here is the final thought. There is no universally best currency pair, but major pairs like Euro to US dollar are generally recommended for most traders, especially beginners. They are liquid, predictable, and well covered by news and analysis. As your experience grows, you can explore minors and exotics depending on your strategy and risk tolerance. Thank you for watching. Please show love by subscribing to my channel.